Bismillahirrahmanirrahim. Continue our comprehensive example. We finished operating budget. The last step in operating budget is income statement, budget income statement. We will continue with financial budget, the other category of master budget. We here have cash budget. Cash budget related to cash received and cash payments, collection of cash and payment of cash or cash disbursement. To continue with his company example, we have these assumptions given in the question, in the illustration. For January 1st of January 2014, cash balance is expected to be $38,000 beginning balance. Here to recap, we have the 1st of January 2014, the 1st of January 2014. Here 2014, we assume that is the it is the coming year, like 2021. Here 2014, we assume that the coming year, the next year, is 2014 in the illustration. Then we assume that in the January 1st of January 2014, we have cash balance expected to be $38,000. His wish to maintain a balance of at least 15,000. Here, his company want to maintain at least cash balance of $15,000. At least minimum cash balance is $15,000. It's prohibited to decline below this amount. We mean by at least that greater than this amount is permitted, but lower than this amount is prohibited. Here we have sales. 60% are collected in the quarter sold, 40% are collected in the following quarter. Accounts receivable, 60,000 at December 31st, 2013, the previous year, or the current year, if we assume that 2013 is the current year and 2014 is the next year. Here we have 31st of December. We have 60,000 are expected to be collected. Accounts receivable are expected to be collected in full in the first quarter of 2014. Okay. Then we have here this balance, account receivable, $60,000, is the beginning balance of January 1st of January 2014, and expected to be collected in full in first quarter of 2014. Okay, and you remember from the first budget we prepared, which is sales budget, we have in the sales budget which we call a revenue for the first quarter, for the second quarter, for the third quarter. We go back for the first budget, which is sales budget here. Go back for sales budget here. We go back for sales budget. We have here in sales budget total sales or total revenue. Here we have total sales or total revenue. Here we have total sales or total revenue. These sales or these revenue, some of these revenues are cash sales and some are credit sales. Then here in our illustration said that 60% of total sales are collected in the quarter sold. In the same quarter which we sell the sales, we have 60% are collected. 40% will be collected in the following quarter. Which mean by that here that if we sell, for example, in the first quarter $20 or $20,000 in the first quarter, then we expect to collect 60% of this amount in first quarter, and the remaining 40% of this amount will be collected in the second quarter. First quarter, the second quarter here is the second quarter is the second quarter here. Third quarter here, if we sell in the second quarter 100,000, then the next quarter here will be the third quarter here. The first quarter, the next quarter is the second quarter. Here, the second quarter. Here, the next quarter is the third quarter. Or the following quarter here, the next or the following quarter. If we assume that we sell total sales, or we expected to have total sales of 100,000 in the second quarter. Here, the following quarter, the next quarter is the third quarter. Then, from $100,000 sales, we expect to collect 60% of these 100,000 in the second quarter, and the 40% in the following quarter, and etc. Okay, here in our example, if we go ahead for this slide in preparing financial budget, prepare schedule of collection from customers. Here we have 180,000, 210,000, 240,000, 270,000. These are sales, total sales from, if we go back from first budget, which is sales budget, 108,000, 220,000, 240,000, 270,000, 900,000 total. Then we have the sales from first budget, and to apply the information in the illustration, we have 60% are collected in the quarter sold, 40% are collected in the following quarter. Okay, go ahead here for this slide. We have here okay. Here we have the first quarter, we expected to sell 180,000. 40% of this, 60%, sorry, of this sales, first quarter here, first quarter here, first with first, we expect in the first quarter of the same quarter, which is here, first quarter, to collect 60%, and first quarter we have the next quarter, following quarter here, as second quarter. Then here 60% to collect, here have 40% to collect for the second quarter, and we have here, if we go ahead with this amount, 180,000 multiplied by 60%, we have 108,000. Here we have 180,000 multiplied by 6%, and the rest of 180,000 is 40%. We expected to collect in the second quarter. Then the rest of the first quarter sales we expected to collect in the second quarter. Then 180,000 multiplied by 40% here, or 180,000 minus 108,000, we have $72,000. Okay, we expected to collect in the second quarter. Here's 60,000. What is 60,000 here? What is 60,000 here? 60,000 is, we go back, is accounts receivable. In this illustration, he said that accounts receivable of 60,000, which coming from 2013, expected to be collected in full in the first quarter of 2014. Then 60,000 we expect to collect in full here. Then 60,000 expected to collect in the first quarter, and 60% of the sales of the first quarter expected to be collected in first quarter. Then $60,000, $108,000. We sum these amounts, we have 168,000 expected to be collected in the first quarter. Okay, and 180,000 of the first quarter sales expected to be collected. 40% of the first quarter sales expected to be collected in the next quarter, which is second quarter. Okay, here in the same manner we have $210,000, which is the second quarter sales. We expect in the same manner that 60% of these sales will be collected in the second the same quarter. 60% will be collected in the second quarter. Then we have here 126,000, and the rest, which is 40% here, 40% of the second quarter will be collected in the next quarter, which is third quarter. Here 40%, which is, here we have $84,000. Then we expect to collect in the second quarter 72,000 plus 126,000. We have $198,000 expected to be collected the second quarter. At the same manner here, we have for the third quarter sales and third quarter collection. We assume that we will collect 60% of the third quarter at the same quarter, which is third quarter. 60% of 240,000. 60% multiplied by 240,000. We have 144,000, and the rest, which is 40%, will be collected in the next quarter, which is the fourth quarter, where we have here the total here, and we have 96,000. 96,000, which is 240,000 multiplied by 40%. Then we have total cash collection for the third quarter 84,000 plus 144,000. We have $228,000 expected to be collected in the third quarter. Finally, we have fourth quarter sales here. Fourth quarter sales $270,000 expected to be sold in the fourth quarter. 60% of this amount will be collected in the same quarter. With fourth, 60% of this amount is 162,000. 60% of $270,000. We have $162,000. Then the sum of 96,000 plus 162,000. We have expected collection in the fourth quarter $258,000. This is the schedule of expected collection from customers for 2014. Here we convert from accrual basis, which is in the income statement, to cash basis to prepare a cash collection in the cash budget, because cash budget is based on the cash basis, not accrual basis. Okay, here we finish the first step here in preparing cash budget, is to find cash expected collections, cash expected to be collected from customers according to our illustration, and we will continue with the other with the rest of the illustration in the next video. Thank you.